All right, then. Well, gave everybody some time to hop on up in here. um, we just gonna go ahead and jump straight into it. Glad to hear everybody's doing good and been having a great week outside of the market. That's always important. You know, make sure that you enjoy life outside of the market because you don't want to allow the market really to be the main reason of your stress. You feel me? Like people making or losing money, that shit really can impact a person's day. So it's super important that you don't let things and the volatility and the situation in the market just really have his way with you, if that makes sense. So I'm glad seeing that everybody's in the chat been enjoying a week outside of the market. Um, Hopefully the market is going to give us some opportunities to enjoy it just as much as we are actually enjoying life outside of it. But as of lately, we've been real stagnant this week. Okay, it hasn't been a lot of big moves for tech, neither regular ES. We have had actual market rebalancing where some of the holdings have changed. Have everybody looked at the actual holdings as of lately? Let me see if I can pull up the actual holdings real quick. Spy in well, let's look up. Let's go to index rebalancing. Let's do the holdings so we can see what's the latest holdings for it. Because this is where the money is gonna be rotating. Um, this is where all the money is gonna be rotating now. So it's important that you keep track of the actual holdings. So that way, let me see. I just slid my Safari screen over. Can you guys see it? Or is it still showing you guys just the chart? Earth Dev, what's good? Riding Cabbage, what's going on? Just the chart? Let me see how I can change this to allow you guys to see it. Uh, all right, what about now? Can y'all see it? Cool. All right, so we're looking at the top 25 holdings right now. But what you mostly want to pay the biggest importance of is mostly the top 10. So as of right now, these are the holdings for SPY. And we got NVIDIA at number one, of course. Strong Apple. Apple's normally always in the top three. So is Microsoft. Normally, these two from over the years were normally the number one and number two holdings with NVIDIA climbing. But we got Apple number two, Microsoft number three, and over here you have your weight. So just keep in mind when one of these stocks that's in the top 10 holdings, the higher ones, when they actually make a huge move in either direction, it normally has that much more control over the actual index price action. So just keep in mind one of the things that I used to do when I first started trading is I used to watch Apple and Microsoft to see how they were doing, because most of the time if Apple and Microsoft was going to have like a weak day or a good day, you can expect the SPY to follow. You feel me? So um we got Microsoft number 3, Amazon number 4, Google number 5, AVGO number 6, Google number seven, 8 MU, 9 Meta, and Tesla is number 10. Now, like I said, they got Meta and Tesla and MU further towards the bottom, probably because of the volatility of it. And sometimes they move such huge numbers at a time. And if that was the case, if they were more heavily weighted, then the SPY probably be at 900 by December, just because of how big, we all see Micron and Meta move big numbers daily. So that'll just increase to the volatility if some of these companies were so heavily weighted. So these are the top 10 for SPY, and of course you're gonna see some few others that probably has a smaller weight, but AMD, Berkshire Hathaway, JP Morgan, Eli Lilly, Intel, ExxonMobil. So these were one of the ones that were in the top 10, and now they slid down. So was Eli Lilly, but this is that. Let's go to the Qs. And all right, so you got your Qs, and with this, of course, with it being tech, it's gonna be more heavily weighted towards semiconductors, since that's what's really been moving the market this year. So you still got Nvidia number one, you got Apple at number two, and then you remember the SPY had number three. They had Microsoft. You see number three over here is Micron, MU. Four is Microsoft. Five is Amazon. AMD was just number 11 in SPY, but with the Qs is actually number six. You got Google number seven, eight Tesla, nine the other Google, and 10 AVGO. AVGO is not in SPY. Well, it wasn't as heavily weighted in SPY, but it's number 10 um, here for the actual Q holdings. We had Meta higher in the spot holdings, but it's lower as far as over here. So um, we see it actually has a complete different top 25. This one has Costco, Cisco, Amot, Walmart. It has a completely different set of holdings. So when you're wondering, like, all right, why are SPY and Q decoupled? It's because some of the holdings are different. Certain stocks are differently weighted. I think when we closed on um, the Qs were up way higher than the actual SPY was because of the holdings. So, um, Palantir, bro. We're gonna talk about that one. Palantir and Netflix, both of those are hurting my heart. But yeah, when we see the market, when we see the two indexes outperforming one another, this is why, because the holdings are made up different. So, all right, let's go back to the charts. Okay, charts up. Bam. All right, so let's take a look at ES first. Let's go. Let's start from the bigger frame, bigger time frame. All right. So this is what we're looking at right now. I got the moving averages, posted up. Yellow is the 20. Um, this one's the 50. This one's a 75, and this one's a 200. If you if you use the moving averages, then the 50 pretty much for me it dictates the trend as far as what side we're trading on. And then of course I just use a 75 just as a median between the 50 and the 200, but the 200 is that one that I absolutely love, because when prices get above it or below it, then it lets you know overall what direction that stock's gonna head. So um as you can see, we're a long way from the 200 on the daily. So everything that we're seeing, market pullbacks and all, it's all healthy from a long term perspective. Is right now we're just in a just a huge pause in the market. So we've climbed for a good little while, and now that we've climbed for a good little while, the markets just continue to trade sideways, in a bigger picture, just so companies can find value. We might be in for some more stock splits or something like that. But I mean, the market is just in a state of pause. I mean, we got a lot going on with the economy. Um, we got the war overseas. We've seen Jerome Powell step away, and now we've got we got new bodies in the Fed. We still wondering about inflation and recession and rate cuts and things of that nature. So all of this plays a part into the market finding its place as far as prices go. So if you can look from this big structure right now, we're like dead center in between what we're looking at right now. So here's the highs, and then here's really almost the lows of the current structure that we're looking at right now. All right. So 7630 and then like right around 7300. We could go up to here and look at structure here, and then we can actually bring another one down just to give us a bigger picture. So like I said, this structure that we're seeing right now, we're like dead center in the middle of it. We had a nice gap up here, which means buyers should be buying up and getting this as it goes sideways. But we don't know how long we can go sideways. So I like this one too. It's sticking out to me right here. Oh, right up in here. So like I said, we're just about dead center in the middle. We're trading below the 20, but then we got a rising 50 coming up in order to carry some of the trend. And if we're above the 50, we're still in a uptrend pretty much. Once we break the 50 is when we want to start looking for more sideways or deep pullback down to retest the next level of what we have is a rising trend line or a rising moving average. So this is just to give you guys a breakdown on what's going on as far as overall healthiness of the spot. All right. What we've been encountering over the past few days was a loss of previous week's lows. Once we saw that, then that's when more weakness kicked in. So we're gonna turn this one red. So here was previous week's lows here at 70, 74, 73.50. We broke below that, and now we're actually trying to retest the next structure. Okay. When you're day trading, intraday trading, swing trading, however whatever you do, previous candle break highs or lows are very important. It gives you the overall sentiment of what's the continuation. You feel me? So if you're watching on a daily chart and you're trying to see what's the actual what's the sentiment, how healthy is the stock trading once the market opens, the first thing I'm doing is I'm going to the daily chart. All right. Reason why I haven't just been aggressive with trades is because we've been going on a consecutive downtrend. So the market is trying to find the bottom, but it's not wanting to really make new lows quite yet. It's wanting to stay within a certain range. All right. And the past 3 days, taken into today, and we almost seen that, but we've been trying to find a bottom around this area right here over the past couple of days. So this is very light support right here. This is what we want to start watching as far as ES goes, as far as SPY goes. This is where they're trying to find a bottom with our rising moving average to pick up the slack if we do decide that we're gonna fall. All right, this is our visual confirmation that we have support. We just gonna say this is support until it's not support anymore. All right. So right now we're already trading below today's opening price. So as of right now, until we trade back above where the price is, this 74 opening price 74.7625. Then we're already going into tomorrow bearish. All right, and coming back to retest this support for the floor that we're trying to find. So when we get it, we just have to wait and see how long it's gonna take. But like I said, as of right now, we're going into a bearish week. Here's our opening price up here. We were way below that. And then as far as today goes, going into tomorrow, we're already trading, at a pretty good pace to the downside from today's opening price. So let's go ahead and start breaking this down further and see what we got. So, like I was telling you, right here is where we're trying to attempt to find the bottom. This massive counter that we saw today showed that bulls are they're trying to buy up this dip right now. But as of right now, we're still not able to hold that previous week's lows that we broken right here. We're still having trouble doing that. And to see all these moving averages coming crashing down on this price action right here at the tip, they're starting to squeeze right here, and you're gonna see the actual moving average crosses. And we're gonna see it come to push the price down, which this is what we're seeing right now until probably all these moving averages actually come to the downside. So going into tomorrow, we're gonna watch to see how these lows are holding up. Right now, it's not looking too smooth, and we just haven't been moving for the past couple of days. Here's Tuesday opening at 3 a.m. We've just been in this small range here. Every day we probably get maybe one or two, maybe three stocks that pop just to keep the chop sideways. And this is what I was telling you about the holdings. They're weighted differently. So certain stocks have to move on certain days because it has to keep the market at a certain pinch point. Okay? So majority of the market might be doing bad, and then you got Meta flying off the hinges. That's gonna help keep the market at a certain level in order to keep it just from crashing down that day. Or MU and Meta might be holding the market up. While the rest of the market is doing bad. Apple, like you just said, Ripple, is one of those stocks that it can run by itself. Normally we seeing Apple run like what, $2.50, $3 in a day. One day it just might run 17 of them things. And you just wondering like when Apple started trading $17 in a day. They gotta keep their market afloat. So when they talk about manipulation, that's what I'm talking about. When you looking at the market and seeing Google down $7 but Tesla $14, all right, the market not trading with each other. We can expect some chop. So um, right now we're coming back down, looking like we're attempting to retest the support range right here. And like I said, it's just been pretty choppy. If you haven't been trading the market over the past couple of days, I mean, you're not really missing nothing. Yeah, some days we're actually running, but it's just running to previous support. There's nothing sideways. If you were buying shares or accumulating shares, it'll probably just be, you'll be break even for the most part of it. Okay. Here's NQ. And like I said, NQ had a pretty dope pump after hours because of MU. MU had a stellar earnings, I believe. But the same thing that we saw on the previous chart of ES. We broke those lows. We broke those previous week's lows right there. J Loco, what's up, man? How you feeling? But yeah, we broke those lows, those weekly lows, and then the market just decided to just go ahead and just take off to the downside. Just absolutely break down. Same thing that we're looking at on the daily. So right now we're retesting that 20 moving average. We're sitting right there. And the market's trying to maintain that. That lets you know that weekly we're at a pinch point if we're hugged up against that 20 moving averages right now on a daily. All right. They bought it back up. They're pushing us right there to where it can make a break. But we're coming off of red days. The same way that we drew that box down here to where we're gonna find some support at, you do the same thing right here and say that it's attempting to find the bottom right here with a rising 50. Okay. So when we break this down, this is one of the things that I was talking about. This is, well, it's not really the same thing because it didn't break the actual highs. 75, 68. So it's not really the highs. But if you go and you look at QQQ, the actual ticker that correlates with it, it actually shows a bearish engulfing because the highs are below the previous days, and then it also exceeded the same day or the previous day's lows too. So it completely took out all the bulls of the previous day, and just normally a bearish engulfing or a bullish engulfing is a high probability chance that it's going to continue in that direction. So right now we're just seeing NQ is hovering right back above previous week's lows. So I mean, all we're pretty much looking at is a rejection back down to the downside until we can take out the highs. So we'll have to trade all the way back up here above 30,576 on the NASDAQ until bulls are actually back in control. You see, we're a great deal away from where we opened up at. Huge, huge deal from where we once opened. So here's your open. This is where we are right now. So we'll actually have to trade back and take out this candle in order to get back in control. That's a good little way. I ain't gonna lie, that's a good little way. So going into tomorrow, this is what we're gonna watch out for. All right. We're gonna actually watch for the support zone, see if this holds up. We'll actually see if it holds above previous week's lows. If it trades and it goes back below previous week's lows, and that could mean that we go back below the 200 moving average on a 4 hour. Like I said, when we were on a bigger time frame, if something trades above or below a 200 moving average, it's temporarily on discount for that time frame. So normally, if you just want to get into a stock at a discounted price and it's a good company, start buying it when it's below the 200. And as you go, like the 200 daily is when you get most of your big discounts. And then if it's below like a 200 on a weekly, I mean, you're probably going to see a trade sideways for a little bit. So you have time to buy or accumulate when it's below that. And then you could have something like MSTR, probably Palantir, that trades below the 200 on a bigger time frame for quarters at a time. But if you believe in a company, those are your opportunities to be able to get into shares that you want, not at all time highs, because you want to be able to have an opportunity to DCA at a cheaper rate. So that way you're able to trim profits easier and at a better pace. So these are regular moving averages. I used to use the EMAs. The only reason I switched because of how volatile the market is, and EMAs react a whole lot faster. So it's it's good when you EMAs, in my personal opinion, are better when you're in a trending market. Simply because they get to react and they get to trend in the direction that it's going. But regular moving averages, they handle volatility better. They don't move as quick. So that way it's not reactive to every spike or every drop. Because when you're trading with EMAs, like I said, because they react a whole lot faster, the volatility really can kill you if you're trying to follow it. So I always stick with moving averages because they move a whole lot slower and it just gives me a better opportunity to identify chop. Because if I know a stock is trading above and below the 200 day to day to day, that lets me know that the trend is not has not yet been decided. We're still trying to find a actual um, support or rejection to reclaim this and trade to the upside. So that's my reason for using just the standard moving averages. So right now, um, all right, man, you have a good one too. But like I said, as of right now, we're still trying to see where we're gonna trade at on the 200. As far as NQ goes, MU was a big spike to it, a huge help. But as you can see, we're still trading below it on the 30, which that can be a rejection leading back down here. But we're eventually gonna see these moving averages squeeze. Probably coming into tomorrow. Probably coming into tomorrow. And that squeeze is gonna lead to the bigger move of probably with in which direction we're gonna head going forward. So it's nothing. It's like it's literally nothing in the market that's really happening right now. IWM has been moving pretty good and is actually trying to find highs. Where's my IWM? Oh yeah, overall picture on NQ. Right now we're still trading bearishly above the opening price. We'll probably retest some of yesterday's opening and closing prices tomorrow and price action to decide from there. So I'm still leaning toward the downside as of right now. Unless once everybody go to sleep, this shit moves back up above here. So IWM is probably one of the main stocks that I'm watching, and that's because it's actually been having a super nice trend to the upside. While we've been seeing red, red, red on both SPY and NQ, we've seen what 4 consecutive green days right here on IWM. So this is definitely something. If you're just one of them people that just likes to buy calls, IWM is the one. Let's look at the actual levels and see what's been going on. All right, cool. So right now with IWM, the same way we're trading, we're watching everything else trade to the downside. We're watching this trade to the upside and to the right. Probably finna break out and make some new highs again because that's pretty much what we're doing right now. So, like I said, if you're call heavy, IWM is a very, very good um, ticker to go with. And the reason why I like it, especially with beginner accounts, it moves very nicely, and the contracts aren't like super expensive. They're not super expensive, and they pay very well. Okay, so right now we saw it today. We rejected around 299. This was one of the things that I posted on the watch earlier today. Was 300s. Um, we actually rejected right there, and they pushed the price back down, but we still managed to close green for the day. That's like I said, that's a big deal. If we look at the weekly, we're just slightly below opening price. We don't have a massive separation from the current price and the opening price. We closed bearish last week, but guess what? We actually took those highs out and invalidated that. So pretty much when you, like I said, when you break those highs, it normally pushes a little bit higher, and the bulls try to attempt to maintain and stay green, just so we can continue to find a trend in the direction that we're going. So the bulls aren't very strong, but it did wick up and it left a little bit, of indecision. But as we've been dropping down, the same thing that we saw the previous week, they've been stepping in pretty good and trying to close the distance between where they actually open it. They haven't been able to win in the past 2 weeks. Well, week they actually closed pretty good here, but they wasn't actually able to win this previous week. But the Bulls have stepped in very nicely this week and have been able to break the highs. So this is what you want to keep watching as we go into the end of the month. See how this plays out. Strong moving average support, very strong. As you can see, even if it has a off week or off week and a half, the moving average is maintained very well on this particular stock. It's very well respected. So we still have a rise in 20, 50, and 75, all acting as support ranges if we drop over the next couple of days. So um, let's look at the 300 calls. Let's go 717. We probably won't even have to go that far out. Let me see, the 26th, July 8th. Since we're going further out, let's look at the 305 calls. Okay, so like I said, these aren't badly priced. So we're seeing a lot of the buyers step in around. We're seeing a lot of the buyers step in below 285. Once these contracts drop down below 285, the cheapest they've been so far is around like 160 and 80 cents, well, $80. But a lot of the buyers are stepping in below 285 and right above $160. And they've been getting a bit more expensive as time goes. Right now they've kind of been topping out probably right here around like $400. All right, man. You have a good night. But these IWM um 305 calls have been topping out around 400, and you've been able to get in at a low of about $160. That's a good payout. And the turnaround hasn't been that long. This is the 19th. You turn around and this is the 27th. So you're halfway there within about 2 days. This is a Tuesday and this is a Friday. So about halfway there, you're already halfway in the money. Super quick. Super quick. Think about if you're just averaging down. If you know a lot of support is going to be around $160, it, you can pretty much decide, like, all right, how much am I willing to stomach? And I got to July 17th. If you can handle probably like what, this is like $100 drop. Yeah, somewhere around there. But if you can stomach that, you can actually add on. You got your levels to add on in order to bring a dollar cost average into play. And you can just continue recycling these same contracts in and out, in and out. So I'm feeling IWM. Even if we find a dip within the next week or day or so, I think I'm gonna keep riding with IWM until IWM stop doing that. And like I said, these are just my extreme take profit levels up here at 308, but the 305 just has an opportunity to go in the money. If you want to get more aggressive, you can go 300s. But like I said, they're fairly priced. At 305 with a couple of weeks out, you can get it like 300, $200. That's kind of hard nowadays when everybody's trading tech and you paying $200 just for uh what I out the money weekly. So even if you trading zero DTs, I thought you can get like an in the money at like $60. That's pretty good. So, um, let's look at let's look at Apple. No, let's look at Palantir because Palantir been getting broken half, like all the way. So, this is what we're looking at right now for Palantir, continuing to get flushed into the goddamn sea of the bears. We're trading at 113.46. I don't know. This is a very, very, very interesting, interesting area for Palantir. Reason why I'm saying that because, and I actually remember when the prices were trading around here, but here and right here, it wasn't a lot of time for anybody just to really get a good entry unless you just bought from here because it exploded. It went from under 100 to almost $150. Let's see. This was this was April 16th. By the summertime, by August, we already sitting at $188. So just as aggressive as it was when the Bulls stepped in and bought this up, this is just about how aggressive we're seeing prices get driven back down to the downside just because it's not a lot of support around here. I mean, this might be a bit right here, this little breakout, and then this little retest. This may be a lot, and that's around 106.50. But even this area between here, between 106 and 84, is, I mean, it's possible. It's definitely possible. So right now, this is the area that I'm kind of watching right now between 121 and 106.50. I want to see how prices perform right here before I just decide it's time to go back long. Um, we got a bit of a descending angle that we can watch right here. Hold on, I gotta zoom out sometimes. Sometimes I gotta flip this shit upside down just so I can know that my brains ain't playing tricks. You gotta draw on these canvases sometimes and paint a pretty picture. You feel me? Because when I be on these charts, probably be trying to draw the Mona Lisa sometimes. But that's what we looking like right now. We got this little descending trend right here. And as you can see, we are super close to breaking below it. And like I said, if you're watching this little area right here, this is where most of the price action is really happening. Is a retest and flush, retest and flush, and then this day it just said fuck it, we not flushing no more. We gonna buy this shit up, and there you go. So right now we're seeing that we're seeing this trend line actually be retested. Well, this support level actually be retested and it's not holding up quite well. So it's very possible we're gonna see 106, this 106.57 sometime soon. And we're gonna have to see if they're gonna want to hold up here. Moving averages, what we got? Everything's on the top. This is a 4 hour. Daily, everything's on the top. And as you can see, when I put the moving average back on, I just told you I be trying to draw the Mona Lisa on this shit. Look how the descending trend line right here. Watch how that SMA, that 200 SMA just ride this shit straight down to the downside. Beautiful, like perfect curve following the trend. But but even though we breaking it, this could possibly be a coil spring waiting to pop. It's on discount. because it rejected the 200 up here. Now we're flushing back below all the moving averages. If we go to the weekly, you see the 20 and the 50 crossing. Right now we're below the 50 on the weekly chart. That means the direction, the actual trend of the market is going to the downside. It's on discount. Like I said, watch how this moving average is gonna continue to just uh, that 50 gonna just come and just gonna roll over. You're gonna have the 75 come and slide over. Bro, I'm telling you, follow that shit. And once you see all these start coming back together and the price start trading sideways, boom, that bitch gonna break out and that shit gonna fly. Like your first target gonna be like right here at 160, 159. The second one gonna be boom, like right there around 186. Boom, round 205. And just to separate the bunch, we're gonna turn that shit green. Cause those are gonna be the targets that we're gonna want to watch for. So these are your leap contracts that you want to look for. If you want to play leaps on Palantir while it's cheap, you feel me? I mean, you getting a discount. Yes, it's still trading above the 200 on the weekly, and it's below the 200 on the daily. So you finna get that squeeze effect because it's gonna respect this the first time it gets above it, and it's gonna want to trade back up and retest the 200 on the daily. This is probably gonna play out for the rest of the year. So like you getting like a sale on Palantir this year, which would be the way that you want to look at it, because you believe within the next next year, next 2 years, next 3 years, Palantir still gonna be a force. And one thing I've been talking about is uh when Anthropic go ahead and does his IPO, the same way we watch SpaceX and all the ASTSs and space stocks flew because of the SpaceX IPO, Southwest stocks gonna do the same. Your Microsofts, your Palantir, your CRM, software stocks and stuff. They gonna hit because they just gonna feed off of that IPO getting ready to pop. And I think it's gonna be like around September or something. So the same way we seen Palantir do pretty shitty, we can go to Microsoft and we seeing the same type of shitty behavior over here. So just peep what I'm saying. I mean, they're creating buying opportunities for a massive run up whenever software does decide to run. So you gotta peep game on that shit because they selling stuff off for a reason. Like it's a reason why certain companies just get punished, but they're still within the SPY and the Q holdings. So trust and believe. Once they drop them, not it's not to say that the stock's gonna perform poorly. It's more so to say, hey, eventually the SPY and the indexes are gonna have to make a run. We're gonna need good companies that's gonna fuel the increase for these index prices. So right now we're seeing some bad behavior with Palantir. It's all right. We getting this shit on discount. We seeing discount. Here's the rise in 200 at 67, but we drew this little support right here at 84, $85. So I mean, normally you just gonna see the SMA. It's gonna move to the right and just depending on the volatility, but you see that eventually prices are gonna meet around $84 to $80 if that just doesn't break. But we're gonna eventually meet that, as time flies by. This is November 30th. If we just move the crosshairs over here. But everybody's panicking over Palantir. I mean, if anything, I feel like people should be talking more about buying leaps on it, just because I mean we see the type of potential that this price action in this stock has. Um, we actually can contribute probably this little area right here too as a as a price target. So 130, 129, 130, just because we did see some price support around this area before it broke down. All right. So don't lose hope on Palantir. You feel me? This is just a breather that was very much due. Just because I'm pretty sure some people that wanted to get in at some fairly decent prices. And here is a very, very solid way of securing a long term bag. I wouldn't even go that low. I'll go about right there. So just looking at it, this is a huge zone for prices to drop down to. But if you like the company, this is where you do it. Who want to buy Palantir at 200 when you can get this shit at below 100? You know, whenever Apple or Nvidia drops below 100, we go crazy, right? Because we like, oh shit, we not used to seeing prices drop this low. So shit, I'm finna build a foundation at these levels. So this is what we doing right now. Same with Microsoft. Microsoft has been underperforming since October. You feel me? Like once we cross the 200, nothing but discounts. It's nothing but discounts. It's number two. Well, no, it's number three and number four or five holdings in both indexes. We gapped up right here from one of the earnings, and now prices they getting them on discount because buyers should have stepped in right here, but now we're underperforming that. Let's go to the weekly, bro. Look at that. How often are you going? Like this is a major discount. You feel me? We trading below the 200 on the weekly. How long do you think we gonna stay below that? How frequently? Look at it right here. We got a couple of bad weeks in below the 200, then we reclaimed it and we traded back up. Same thing I'm saying about when Anthropic goes IPO, it's gonna be time for buyers to step in to reclaim some of this price action. We don't see that this often. We had a small opportunity back here. When was this? 2022. It's like right after COVID and shit. We retested the 200. We started getting bought back up from here. We almost retested it here, and then we actually broke below it, and they stepped in heavily and bought it back up here. So, I mean, all we're seeing is what we saw over here once that IPO hit, and we had those consecutive green candles to where the shit wouldn't stop. We just got that over here. Now it's trying to find some value. Prices are trying to settle. We temporarily getting it on discount. If we go to the monthly, we're briefly breaking below the 50. So if we're briefly breaking below the 50 on a monthly, everything is saying, hey, discount, discount, discount. Big bearish engulfing candle on a monthly, which means we might trade sideways for a bit. But as long as Microsoft stay in the top five, it's worth the wait as far as the company goes. So right here is a very long consolidation period. We've seen it before. It lasted from January of 24 all the way to February of 25th. So about a year it consolidated. Maybe Microsoft calls 6 months out. And if you can recycle them, you can get in and out and just have a strike price that you're comfortable with. So if I was to look at it and break it down with what I'm seeing right now, like I said, we on discount. Below the 200 on the weekly is screaming buying opportunities with the crash and moving averages on the daily. All right, so this is your indicator that we'll trade sideways because it's gonna have to break back above these moving averages on the daily chart. All right, so we already found our structure from that long ass consolidation period we seen way back when. So This is a consolidation period. It was a post ER gap up, and now we're seeing the consolidation levels here. So let's say we did meet the 200 on the daily here over some time. It's at 449 right now. This chop period up here is at 426. You feel me? So let's go look at some 425 contracts. I bet you these hoes still expensive. And this is July 17th. Bro, these contracts at 93 cents right now. I mean $93. So is is only really losing value right now because of it hasn't really been moving much. Let's see if I can put fingers on what the prices are really holding up at. So like I said, right now we looking at these contracts on a major discount. All right, they're below $100, and today is the first day to where it really didn't hold above $100. All right, buyers should start stepping in right here at about 60, 55, $60. If it drops below here, it's just because it's run out of time. I don't know if you guys ever heard me say the Ice Cube, theory of how I look at contracts, but um, imagine that you holding a ice cube and you move closer to a source of heat. The further you are away from it, the ice cube is good. It melts slower. But the closer you get to that source of heat, they start melting a whole lot faster. So that's why zero DTEs and weeklies, that's why they go crazy if they don't actually hit in the money when they need to. So like I said, you gotta time this just right. Um, like I said, if we can catch these around like $60, we can ride this for probably like a $60 pop back up to 120. You can recycle these. That way, that's just some buying power, slow gradual buying power build up. And one day you just might get a solid day to where you catch it at 160 or somewhere around here, and it pops to 240 or 300. And we've all seen Microsoft move crazy. It's one of the ones that you never expected until it's already too late. So I would definitely keep watching this one. Like I said, it's under $100. Let's go back to the chart and see what that first retest level was. Yeah. So the first retest level that I'll be watching for, it's right here around 396, 400. So let's see what the 400s look like. All right, so even the 400 calls aren't bad, and this is for July 17th. So the even if like I said the 425s are too far away, this is $25 closer. It's at 275 right now. Buyers should step in around 210. You can swing this and you can recycle profits. Like this is a safe swing as long as we don't get too far away from here. The longer out the expiration date, the better. Even if it's like this, because let's say if we wanted to go out and just give it like some crazy length, let's go August, just to put some time on that shit. Like you see how these premiums are more expensive, and they stay expensive throughout the whole entire summer. That's because it's like that's letting you know that these time is gonna be able to hit $400 by August 21st. Just letting you know that these aren't gonna lose much value. because it's ample enough time from where the price action is right now. We're saying that it's below the 200 on a bigger time frame, and that it doesn't stay below major moving averages long. Then this is an opportunity for these contracts to move fairly quickly and recover. All right, J Loco, man, appreciate you for hanging out. Yes, definitely. Go ahead and put the little man to sleep, bro. Get plenty of rest so we can get back to it in the morning if anything does happen, even though we in this chop fest, you feel me? But uh definitely tap in with your boy. You know, I'm always around, my guy. All right. But yeah, definitely want to watch these 400 strike price 400 to 425. Those are the two that I'm going with. I'm sure they have a ton of volume, a ton of open interest, which is super important to getting in and out of the trades. Also, the spreads, when they have a lot of open interest and volume, the spreads are typically closer together. So that way, when you can get better fills, if you're not using limit orders, and then when you do want to exit, the spreads are tighter, so you can actually get your true profits. You know, you're not seeing $100 and then the spreads are so freaking far away. You got to get filled at $75 just to get out. Um, you just gave away $25 because it doesn't have any. The spreads are too far apart. So this is what we want to watch for. Like I said, we can definitely go out further with the 400 strike prices all the way to August. If we want to look at it, those are tap in. If you want to find something just, more affordable. More affordable to me is like 300, just because you can tend to average down easier. Because, in my head, you can lose. Those are just ugly, probably because of the expiration date. But with $300, let's say you lose 150, you can average in with a fresh one with good limit orders, and then you can make that money back a lot quicker. You feel me? So like these right here, July 24th. All right, so these are like at 410. Okay, if we open lower, then we can see these go down under 200 also. What does that mean? We got to July the 24th for some of this money to flow back into it. It's already been destroyed pretty lately, because we've been seeing Microsoft get pinched off every day, like Palantir, like software. So the simple fact that we could be seeing this trickle down a little bit further, 400s with plenty of, I ain't gonna say plenty of time, but with pretty much almost the entire month ahead of it, these you can recycle them. Like I was saying, Ripple, if you can have your risk tolerance set up, and you can average in, say you bought one at 350. If it dropped down to 130, you can buy another one, average in. Once you make a little profit going back up, and once it comes and breaks out, then you can sell this original price at 45. You can sell a little bit for profit. And if we dip back down, that's when you start the recycling of the contracts, you know. Uh-oh. But yeah, that's how you can pretty much catch in on that. Okay? So, uh, uh, yeah, so definitely watch Microsoft. That's the software stock. The two software stocks that I'm watching. You said the mic cut out. I was talking about how you can use Microsoft. This is a fairly priced. Oh no, it's all good. This is a fairly priced contract, a very attainable strike price. Is at $400, July 4th, July 24th. So you got a month out. And if these drop down, you can start. Like I said, there. This is kind of like a sweet spot for me when I'm buying contracts. You feel me? When I can get some below $300 to $200 with plenty of time and a lot of volatility for the stock. We've been seeing a drastic sell off. We can see a drastic move back up, and it could really print money fairly quickly. So you see this day right here, it moved from 775 all the way down to 485. That's an easy $300 move on the way back up. Easy, easy. So, like I said, right now we kind of seeing a coil effect. Stocks don't go down forever, and Microsoft is a top five holding of both indexes. So eventually, whenever the market is gonna need it, when a lot of the stocks are underperforming, this is the opportunity where we can see some of the top three or top five stocks actually pull weight and be able to maintain a certain level for SPY and for Qs. So take Microsoft and Palantir as that ace in your back pocket. Okay, like this is gonna be the one that you just surprised. Okay, it's popping off today. I'm gonna trim off some whenever it does show its hands. So, oh man, hey, it worked its way back around, right? But yeah, look at Microsoft and Palantir is your ace in your back pocket. You feel me? When everything else fails, this is when you probably gonna see your software stocks step back in. All right. Um, did anybody have any stocks that they want looked up? Tesla. Tesla been it's been breaking down. So I know over the past few streams, I've been talking about nothing's really been performing heavy other than semiconductors. You got Tesla's been in a downtrend. We just looked at it. You got Microsoft that's been in a downtrend. We just saw it. Nvidia's been moving sideways. Tesla's moving down, but the stock market has been making all-time highs. Show me where. Like, show me what else has been holding up the market other than these semiconductors. AMD, MU, like, bro, they've absolutely been moving. So, Tesla, this is the little pattern that I'm watching it right now for Tesla. Um, it's 1% of the holdings now. So this gives us the opportunity to actually move more volatile and not affect the index's prices as drastically. So it's actually below the 200 on the daily. It's been rejecting here 1 2. It didn't quite make it there 3, and we're retesting a 75 moving average here on the weekly. So this is kind of a pivotal zone, and we've broken it. We've already broken previous week's lows, which that candle was red already. So, I mean, it was just a continuation to the downside. And I posted about this the day before, but I said we were flirting with previous months lows, and we've broken that. So this is definitely a continuation. Boom, there's the lows right there. And today, I think is the day that we actually broke it. Yeah, because if we look at yesterday's candle, Tuesday's candle, it got right there and it bounced back up just a little bit. And then today we actually broke below it. So, I mean, this is just a confirmation that that previous month's green candle has just been invalidated. And now bulls are that were already in control with it trading below the opening price. But now they're really looking for blood now that we broke in previous month's lows, and they possibly could be looking for anything around here just from a bigger time frame. So this is the same way we were looking at it on a smaller daily time frame. We can go and we can find the same type of structure here. The same way that we went and found it on SPYs and we saw the structure knows ES. But the same way we went and found this on the daily chart on ES and found a little two candle pattern, 1 2. that shows some buyers stepping in. We going to Tesla and we doing the same goddamn thing. Simple. You going out, you just have to go out on a bigger time frame and see where the actual support zones we're holding up. Since we're breaking this lows, we need to see and prepare and mark out what we gonna look for prices to actually get, start stepping back in. All right, so right now that's between 371 and 336. Not saying that we're gonna push that low, but this is just where prices have seen probably the most steady support zone. So definitely, it's a zone of interest. Exactly. So when you go to this to the weekly, I mean, you see more candles operating within it, but then you also see it is getting ready to trade below the 50 on the weekly. So we got we definitely want to watch to see if this weekly candle breaks it. We're probably gonna bounce. And then maybe next week, if it gaps down, the market gaps down or something, we'll see a open below it. Even if we break it and kind of reclaim it, next week comes and we open below it, then that'll be a rejection, possible rejection here at the top of this zone. And then we'll see a 1 or 2 week decline down here to where it just continues to trade sideways. All right. So it's not chop block exactly with the 200 moving average moving sideways on the weekly. What we're looking at on a monthly, it's not really much. So we'll probably want to deal with the weekly, and like you just said, chop zone. The fact that the moving averages are all moving, starting to move sideways, everything's starting to move straight, like straight right. That just lets you know consolidation level, chop zone. If anything, you're just paying attention to see how long it's gonna stay there. So going on the daily, so that confirms that price action around that block. Yeah, yeah. So like I said, you want to watch that. You see how price held up around here. We see it held up here and here. It dipped below it and then it quickly came back in. So that's our first confirmation that we marked out on a bigger time frame. This is what we marked out on a monthly chart, showing what buyers stepped in at. So now that we see that, we're gonna treat it as support or that chop zone as long as it holds. Once it breaks, then we'll deal with it. I always say, trade what you see, not what you believe is gonna happen, because that's what makes you sit on hands for too long. And you be like, "Damn, I saw it. I should have bought it." Or if you have the mindset to taking your emotions out and becoming mechanical with it, like, all right, I know that buys can step in anywhere between 371 and 335. I'm a trade it. And then I'm just gonna be prepared for it to break below here. If it break below here, then I'm going out. This is my long term stop loss. But if I know we come up out of this thing, if we come back out above 370 and we start trading back up to the upside, I just found some contracts on discount long term. So this is what we're watching right now. We're watching this trade to the downside. We got descending support, descending resistance. Here's the arrow trading. Price of trading below the arrow right now. And it's kind of not the middle. Like this more like the middle. Bro, you gotta mind me sometime my ADHD be kicking in. I gotta have shit kind of, you know, like I said, Mona Lisa, bro. But now that we're trading below all the bigger moving averages to the downside, like I said, you can expect it to come down a little bit more. Watch it start rejecting at these moving averages, you know, and see how it dips. I ain't even turned any of my levels on. Let's see. So you see how I just turned it on. You see the structure. A bounce at 373 and then 366. So this is where the last little level of support is at. A break below here, we can see it fall a little bit more. I don't think that we'll flush that low. Not yet, but you see where it's pointing at 350, 345. So I don't think we're gonna drop that low this week. I could be wrong because this market doing some wild shit. But you know, we gotta play it how we play it. He said I vibe the same. I vibe with that. I'm the same way. Mona Lisa is crazy. Bro, I believe in art, man. I just got this thing, like, that was my thing as a kid, drawing and I was big on drawing like Dragon Ball Z, Pokemon and shit, Digimon. I'm a 90s baby. You feel me? So, bro, I have about 5 pictures of Goku, Trunks, um, Gohan, everybody. And then I had them tacked on the wall. So when I'm playing with these charts, bro, like I'm literally zooming out trying to see what look right. Like if I take these moving averages out, like this is crazy. So we see what Tesla shows us what it's capable of doing. Straight down until it gets where it needs to get. You see, this is where the old support was. Watch how I do this right quick. So this is where the old support was. All right, we're gonna take this out for right now. So this what this means. All right. So here's where it actually broke out. Here's where it popped up at, and it started using here as a bounce. It got a deep pullback, and it got bought up and exploded back up. Hey, bro, when I started talking, bro, he pulling out the notepad like, all right, he finna drop something real quick. Let me catch it. Let me catch it. So when it broke out and it popped up, all right, once it starts showing you where the support is, you can draw a big ass box all the way across. Okay. It started catching this, it had a deep pullback and it exploded back to the upside. What they tell you? When this big explosion happens, that tells you, hey, they just loaded up right here. They saw the big move from here to here, they jumped in, they loaded up, they took it back up to the moon. All right. So when the sell off came, earnings, it traded all the way to the downside when earnings came. All right. Once it came, it dropped so bad, it came all the way down and retested the bottom, and it even dipped into some of the old support zone. All right. So if you want to take this, let's see, breakdown, break up, retest. All right. Look for the look for the support behind the support. All right. So it liked that. All right. So now that I found that one, this is your second block. All right. So I had to go and find the support and resistance over here. The top was right up here. So I went and found. I already know the resistance is up here. I went and found the most solid support level down here. I'll even change the color. All right. So this is the first that we see. Well, this is the first actually. This is the second level of support right here. So it got bought up, it drained itself back down all the way into the first level of support. And then it bought it back up. Now where we're heading back into this first level of support, right? If we're already, this was already the first level. Now we're dipping back into the actual first level. This is where buyers are gonna get extremely greedy at. The further, the further it trades down into this yellow zone and it gets up in here, the more possibility it's loading up long term. Let's not even talk about if I go back and I trade this one. We see this like all of this is just showing you how to find long term buy levels. So these are just big frames. All right. But we're trading back into this right here. And we're just gonna look for buyers to step in. You see that they held this right here last time. This 339.30. This is where it got bought up last time. So we're gonna look at this if it continues to trade its way down, which we've seen that before. It's showing us that cards before. If we trade back down here again, we're gonna play this as support until it actually pops back up. If it breaks down here, then we know we're trading deeper into the support zone. So I'm not saying that it's not healthy, but what I am saying is 1% and I think 2% of the Qs for a reason. It probably can't move too much, even though it's a real volatile stock. You know, it can't control that much weight of the actual indexes. So just be careful on Tesla. Moving averages, it's trading below most of them on, well, just about all of the ones that I have on a daily. It's almost getting ready to break the 50. If it drops below here and opens up a new weekly candle below the 50, then we'll see price continue down to retest this 339.30 level possibly. And if it doesn't hold there, then like I said, we'll deal with it from there. So, but God, man, time flying. It's an hour and 17 minutes already, man. And we went over what about 5 stocks, maybe. Sheesh, time fly, bro. Like real talk. So I guess I'll go ahead and wrap it up, man. I've been needing to get on here, bro, and chop it up with y'all. Um, so we can make some sense. We can talk some nonsense and talk some sense. See how you guys been feeling and everything too. It's always pretty dope being able to vibe with y'all. And you say you appreciate my time, bro. I appreciate your time. I appreciate y'all time. So I guess we'll wrap it up. I'll wrap it up right here, man, and call it a